Hello everybody. So this video is entitled MSTR stock outperforms. Outperforms Bitcoin, that is, today. And all we had to do was wait. And waiting, we have been doing a lot of waiting. And you know, finally we rejoice that things are looking good for this stock. You know, this stock is, of course, a darling of this channel. I've covered it since the $20 range pre-split, right before that split. You may remember those nice times. But folks, Bitcoin, first of all, is finally cooling off a bit. I'm going to get to that in a second. I'm very happy about Bitcoin cooling off. I believe we had gone too far, too fast. I mean, we have a big event for risk assets tomorrow night in NVIDIA's earnings. And, you know, typically the earnings are good, but sometimes the reaction on the day can be choppy. So let's be careful with that. But typically the earnings are good for NVIDIA. It's just the market reaction is unpredictable. The market is very much like a casino, but more unpredictable perhaps than NVIDIA, because NVIDIA tends to rebound, right? Give it 10 days, NVIDIA often, almost always, you know, NFA, no financial advice, but almost always rebounds. NVIDIA rebounds. The thing is Warsh on Friday morning. Now that's the wild card, right? That's the first time he speaks, you know, in Jacksonhole, and we have a history of Powell's speeches sending the market down. And so, to me, this is wise for Bitcoin to cool off a little bit. And so, is Bitcoin cooling off? Yes, but look at strategy. Strategy is not cooling off. Strategy is actually up 3% on a day where Bitcoin is flat to slightly down. So Bitcoin hasn't really moved today. Strategy is up 3%. And so what does that tell you? We are literally catching up on the mNAV. We just need a few more days, you know, maybe a good week's worth of price action like this to catch up. And now I believe that strategy can actually catch up and see a rise in mNAV even if Bitcoin stays flat. Because if you see how Bitcoin has risen very, very quickly, strategy has followed really in lockstep with Bitcoin. Really up, strategy is up 20, what was it, between 20 and 25% roughly, and Bitcoin is also up between 20 and 25% roughly. Looking at the time frame, you look at the past 5 days, 7 days, I guess, if you include the weekend. So they're up about the same. The correlation has been 1. The correlation should really be 1.5 over the long run. So there's a lot of catching up to do for MSTR. Today was a catching up day, and we can see that with the mNAV. The mNAV is back at a 1.04, which is very good. That was the historic valley of despair mNAV. During the rally of Bitcoin, we had dropped to an mNAV of 1. So I hope and I expect that this mNAV will keep increasing. Perhaps this is a sign that Sailor is not doing as much ATM right now. And speaking of ATM, we need to talk about Stretch. Stretch, of course, the grand plan, the grand goal is to get Stretch back to 100 so we can ATM on the daily, right? We can ATM every day on Stretch. Note that Strive, of course, has its own preferred instrument, which is Seda, which is a much smaller preferred instrument. So it was quicker to get back to par. Strive also pays 13% when Stretch pays 12%. So these are many conditions as to why Seda is back at par before strategy. You can see Seda ATM'd all day. They were able to get nearly 200 Bitcoin from that ATM according to Stretch.live. Now, Stretch is not there yet. Stretch was looking very good towards the end of the day, and then for some reason, it dropped at the end of the day. Whatever, this is the market. The market does whatever it does. It's, you know, manic depressive. If I look at Stretch.live's Seda status for the ATM, you can see that towards the end of the day, we had a little bit less of issuance. It's not that stark, right? It's a little bit. We had a little bit less of issuance for Seda towards the end of the day. So perhaps, of course, this is translated in a lower price of Stretch, because I have to assume that the people who are interested in Seda are also interested in Stretch, especially if you subscribe to the idea that Stretch is going to get back to 100. The problem is that right now, of course, Seda pays more. And Seda pays daily because it's a daily dividend. It attracts a lot of retail investors, maybe in a way that Stretch does not. I believe eventually Stretch will probably move to daily, but they may need to reincorporate elsewhere, so I don't know how that's going to work, but clearly daily is better than twice a month. To me, that's the way to go. Kudos to Seda, and Sailor even congratulated Seda on moving on the daily. That's very amazing they were able to do that. The problem is Stretch is a much bigger instrument. It's a 10 billion instrument, therefore it moves more slowly. It's understandable, it's expected, but we are moving back up, and so that is something to rejoice about. Cooling off on the greed, and are we cooling off in general? So we hit 80,000. Was it yesterday night, or I can't remember. Not too long ago, we hit 80K. I think it was yesterday evening. Yesterday evening, we hit 80K, and we hit it again in the morning, if I'm not mistaken. So that was really, really good. But we cooled off $2,000, and so that is good given the macro market, the macro events that are coming up. Given the speech on Friday and Nvidia, I think this is good because we moved too soon, too fast. Too hard, you know. I like Bitcoin to move fast, but this was a really, really, really fast move after so many months of despair, and so the move has been casino-like, very much casino-like, and I don't like that, of course. And so I would like to see a period of cooling off, especially as we are getting into September, and September is a bumpy month, and then we have the midterms, which is also a bumpy month. So bumpy October, bumpy September. Do we expect that until the midterm? I certainly do. Who knows what's going to happen? Who knows what sort of political speech we're going to hear from here and there? You know, so the fear and greed is dropping, and perhaps that's on the back of that. So that's a good thing. We were at 81 yesterday. We're back at 80. Hopefully we get to 79. Why do I want to get to 79? For psychology. If we get to a 79, we're just in greed. We're not extreme greed anymore. So hopefully this keeps dropping a little bit. I like that. And I want to point out that the Bitcoin ETF, so the money getting into Bitcoin via the ETFs, is slightly down over the past few days. This needs to update for today. This is about a day late in general, but I find this pretty handy, and it's on CoinMarketCap. So if you look up CoinMarketCap Bitcoin ETF, here's the link. You can actually track the ETFs between like a day to 36 hours late. You can actually track the ETFs inflow ETF by ETF, and you can see during the Valley of Despair it was very lackluster, and we had a lot of volume the past 4 days. So this is also something really nice to see, meaning that there's real demand. There's real money going back behind this move, and backing this move is real money. And lastly, this is one I point out, talking about more Bitcoin in general. To me, this is a macro-driven rally. This is a rally that's driven by the original thesis of Bitcoin, not by retail FOMO, fear of missing out. Retail, I believe, is in AI right now. Retail is in neoclouds right now. That's where I believe retail is. Retail perhaps missed the boat on crypto and on Bitcoin because retail, wanted to do something for the past 9 months. So the past 9 months have been so boring for crypto, so retail probably moved elsewhere. But this move to me is closer to the classic thesis of Bitcoin, which is if we have insane monetary inflation, then hard assets should go up. And the reason why I said that is because we've had a very strong signal last week, which led to this rally, which was the Bessent talk about buying now $4 billion worth of long-term treasuries as opposed to $2 billion worth of long-term treasuries. That screams monetary printing because, of course, presumably to buy back all of these treasuries since we have a deficit, so presumably we have to issue more short-term debt. But to add fuel to the fire, you may have seen an interview yesterday from Bessent talking about the fact that they actually could spend money to buy back the bonds. They could spend it from the Treasury General's account. And they were pointing out that in the prior administration, the TGA was sitting at like 600 billion, and now it's sitting at 950 billion. So there's like a 350 billion delta, which could potentially be spent on buying back the long end of the curve. And this was a very bullish thing that he said. And when he said that, you actually look at the 10-year, the 10-year dropping against like a rock, because all of a sudden, and the first time he said we're going to move from 2 to 4 billion, the 10-year believed him for an hour, and then, it's not really a costly signal, so the 10-year was like, whatever, going back up. And then he makes this speech saying, oh, well, we could tap into the... because there's a huge deficit. So these are not savings, but we have excess money sitting on America's checking account, is how I want to call it. Excess temporary money sitting on America's checking account, and he was like, yeah, we could spend it to buy back the bonds. And so that's straight monetary printing. That would be straight 350 billion that goes into money printing, because of course that 350 million is going to have to be replenished by issuing new bonds. Short term or long term doesn't matter. They're going to issue new bonds, and the buyer of last resort of these bonds is of course the Fed, in case there is no buyer. And so this is like a pre-QE, pre-quantitative easing, essentially, because essentially at the end of the day the Fed's gonna buy it. At least that is my take on this channel, called the beat the denominator for a reason, because I believe the money is going to infinity. But anyways, this puts a costly signal behind the speech of Bessent here. And so maybe the quote is not "don't fight the Fed" this year. Maybe the quote is "don't fight the Treasury." If they're willing to spend the savings on buying back the bonds, which would literally lead to so much monetary printing, if you're willing to do that, then don't fight the Treasury. And that's why a lot of the risk assets are actually going up. If you look at a lot of the risk assets, they're not up as much as Bitcoin, but they're up quite a bit. If you look at gold, gold past month 14%, since the speech 7%. Of course, Bitcoin since the speech between 20 and 25%, depending on the market hours you use. If you look at copper, copper is up 12% since that speech. And if you look at silver, silver is up 17%. I'm not exactly using copper and silver. I'm using the miners as a proxy here. But you get the point. These are moving up in unison with Bitcoin. And of course, why is that? Because, copper, silver, gold, very limited supply, very hard to get. And just like Bitcoin. But of course, Bitcoin is the ultimate limited supply, because it doesn't matter how hard you mine it. You can't get more out of the ground. It's every 10 minutes, new Bitcoin gets issued, less and less every 4 years, and you can't get it out of the ground. Unfortunately, for copper or for silver or for gold, it's not the same, right? If the price goes up, then the miners expand capex and expand more energy to get more out of the ground to make the price of a commodity come back down, although they are pretty constrained over the short term. All three of them are pretty constrained over the short term. And that's the delta, right? It takes a few years to actually mine and get these ores out of the ground. It takes a few years to expand the mine, to build something new. You're living in the world of bricks and mortar. Silver is even more complicated, because a lot of silver is actually manufactured as a byproduct of other mining industries. So the supply is still very much more constrained than the supply of money. That's the point I try to make in this channel, at least in the big early days of the channel, is that the supply of money is really not constrained. I mean, the supply of money, it's free men, essentially, right? It's free men who control the supply of money, at least in America, in the dollar. That's not the case for gold or copper or silver, and especially not the case for Bitcoin. Copper, silver, gold, this is constrained by discovery of new mines, by capex, by investment, getting it out of the ground. Bitcoin is constrained by code and halvings. So that's the key difference right here. So anyways, I think this is a pretty bullish development, and I like to see Bitcoin actually up on its original thesis. How many short-term people have attacked Bitcoin saying, see, Bitcoin doesn't protect against inflation because you nitpick you nitpick the time period, and you're like, see, it doesn't protect against inflation. You should have invested in, I don't know, handbags or something. I've seen that type of argument on X, right? Or the famous Financial Times argument, Bitcoin is as rare as my teeth, right? As that journalist once said. So anyways, we're back to the fundamentals, and I like that very much. This was not investment advice. This is not financial advice. This is entertainment only. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.